Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane, and this week we're covering dissolution procedures for unused entities. We cover this topic in greater detail in our Critical California Tax Issues on-demand webinar, and you can see everything covered in this 4-hour webinar and get registered at caltax.com under the Webinars tab. Many of our clients form corporate or pass-through entities and never use them, or the business fails and the shareholders, members, or partners abandon the business and go to work somewhere else. In many of these cases, they don't formally dissolve the entity with the Secretary of State, and the shareholders or owners may receive a bill from the FTB for the minimum tax, plus penalties and interest. If certain conditions are met, the FTB may not hold the shareholder or member liable for any taxes due, but note that relief does not apply to a general partner. For years, there were limited options available to address this issue, but in 2018, legislation was passed that allows for voluntary and involuntary administrative dissolution for California corporations and LLCs. California corporations or LLCs that registered with the California Secretary of State but either never commenced business or ceased operations but never formally dissolved with the Secretary of State's office can apply to the FTB for voluntary administrative dissolution. Administrative dissolution does not apply to foreign entities, which are non-California entities that register to do business in California, or California entities that move their operations outside California. Administrative dissolution applies to entities that were not doing business at any time after they were formed in California, or ceased doing business and have filed all required returns for the tax years prior to their cessation of doing business. In these situations, the entity must have been compliant in filing and paying taxes during the years that business was conducted. Taxpayers that have been registered more than 12 months with the California Secretary of State's office can apply for administrative dissolution using either Form 3715 PC or Form 3716 PC. Before they're approved, the entity also has to submit all tax returns filed up to the date the entity ceased conducting business in California, and pay all taxes, penalties, and interest up to the date the entity ceased doing business in California. Once a taxpayer receives an approval letter from the FTB, it's required to formally dissolve with the Secretary of State within 12 months by filing the applicable dissolution form. If the application for administrative dissolution is approved, the FTB will abate all outstanding liabilities for the $800 minimum or annual tax for the periods that the entity was not conducting business and related penalties and interest. But taxes based on income related to an entity's activities or operations while it was still conducting business will not be abated. Administrative dissolution also does not discharge the entity's liability to any other creditors or relieve the entity's directors, shareholders, transferees, or other related persons from their liabilities. Only entities that have no assets are eligible for administrative dissolution. An entity does not need to be suspended by either the Secretary of State or the FTB before applying for voluntary dissolution. But an entity that has been suspended can apply for administrative dissolution rather than wait for the FTB to apply the involuntary dissolution provisions of the law. For California entities that have been suspended for a period of at least 60 continuous months, the FTB may initiate an involuntary administrative dissolution process. Prior to administratively dissolving the entity, the FTB will mail a written notice to the entity's last known address and transmit to the Secretary of State the entity's name and corporation file number. The Secretary of State has to provide 60 days notice of the pending administrative dissolution on its website. If the FTB doesn't have a valid address on file, the Secretary of State posting is deemed sufficient notice. Entities that want to avoid administrative dissolution will need to file an objection with the FTB within 60 days of the Secretary of State's posting. If no objection is received, the entity will be administratively dissolved at the end of the 60-day period. We also covered dissolution procedures in Spiedel's analysis and explanation of California taxes, and the 2023 edition is updated and ready to ship now. You can choose from a print or online version at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.